Hi there, traders. This is Brad Gilbert with the FX Market Insight for Friday, the 9th of August. All right, now let's have a look at the MyFX Trading Hub and just have a look at the overall analysis. If anything, the shock and awe sort of strategy from Trump earlier in the week, over the weekend, really sent the hourly charts and all the currencies into a bit of a tiz. Now, what we're seeing is that being completely diffused, all right, pretty much across all pairs. Kiwi is probably the only pair that holds all time frames up and that bearish sentiment following from the RBNZ announcement a few days ago. So, but it's only just, and this is because what we saw initially in the week, which was driving the currencies, was the risk-off scenario. And you can usually see that straight away in the equity markets. When these are a sea of red, it's risk-off. Sell Aussie, sell Kiwi, sell CAD, and the other pair sort of just wash around. The dollar usually goes up against against the yen and the Swiss. Now, the whole thing has calmed down. The equity markets are finally back on. They're rallying, which is risk on. You're buying Aussie, buying Kiwi, buying CAD, and probably, at this stage, not doing much with the Swiss and the yen. If anything, just probably squaring those positions up. So that's the dominant theme that is running through, and this is systematic of those geopolitical events which are obviously dominating the market. Okay, as I keep saying, these are unprecedented events that just keep going on forever. Okay, they will end, but it's at some stage we're just going to continue to be patient. So what we've got at the moment is markets that are completely diffused. Okay, and this is going to be quite interesting because we've got a hell of a lot of good things coming out today. So the major upcoming events, we've got a number of things in the Asian session. The RBA governor speaking. We've got the monetary policy statement, which could come in and give us a bit more information about the what the plans are from the RBA. Be interesting to see what happens, especially with the RBNZ going by 0.5% during the week. A key one will be the Chinese inflation numbers. Obviously, a big impact for Aussie, Kiwi, and the yuan. And then you come into that European session. Well, we've got UK GDP. To me, nothing is really impacting sterling. Everyone wants to know more about Brexit than anything else, and that's sort of really slowing down any fundamentals on sterling. And then we come into the North American session. It's one of those weeks, one of those months, I should say, where we do get the crack at the Canadian employment numbers without the non-farm payrolls sort of dominating. So that's going to be very important for dollar CAD, which at this point is, you know what, it's lost all its mojo as well. Oil's back at $52 and it's all looking a little bit loosey-goose. All right, now let me just bring you across over to the charts. Just have a quick look here. Now, I've left my trend lines there where they are just to show you what they're breaking. So the Aussie, to me, it was looking pretty good. I mean, I got short Aussie up here. It sort of dropped about 20 points and then I just sort of let it go. And then obviously just through the day, it slowly squeezed higher. I thought that was over. We were still in the position, back in the cash, and then all of a sudden you get the risk-on scenario during that North American session, and it blasts it out. Euro just trading sideways, as is sterling and dollar yen. Here's oil, dollar CAD. It's pretty much all over the place. Short term, it's drifted back into the range. I wouldn't say it's going down, but it's not an easy trade by any stretch. The Kiwi to me still looks the best trade, and I'm short here at the moment. This is the level that sort of really broke down through. You know what? It looks like it's ready for a little pop to the top side, but still, if you're not short yet, well, then getting short back towards this resistance line is the preferable one. I actually didn't think it'd get back there. It's only up here because of that risk-on scenario with the equity markets, right? There will be stop losses at probably just above 65 the figure, but getting short back towards 65.40 has got to make good sense, especially when that central bank is extremely dovish. So right now, you look at these pairs, and we do have some key events. Obviously, the Aussie is going to be in play, and the Kiwi with the, especially the Chinese CPI numbers. Once again, if I get strong CPI numbers out of China, I probably will square up my Kiwi position that I'm short, even if it's slightly out of the cash. I'd rather square up and then get short back towards that next level. There's no point just sort of hanging on for dear life. If the numbers come out weak, though, which is what I'm expecting, we should see Aussie and Kiwi drift lower. And then, obviously, during the European session, sterling's going to light up with the GDP, maybe. I'd probably say not. And then the North American session, well, we do have US PPI out as well, but dollar CAD will be the major focus. And unfortunately, that's sort of just dancing up and down through a short-term support line. It's going to be a bit tricky. But you know what? The employment numbers are a big number, so they could generate definitely some movement. There's a bit of a discombobulation there with the correlation with oil at the moment, but the employment numbers may sort it out. All right, that's pretty much where we are, guys. It's one of those weeks. I mean, normal market conditions like yesterday looked so nice because there wasn't all that noise from Trump, the media, everything else. Unfortunately, what we had was a turnaround, as I said, in that risk on, risk off profile, and that was enough to really move the markets enough, especially the Aussie and Kiwi, against what we're currently thinking. But that's pretty much it, guys. That's all we've got. Plenty of big stuff coming out, and for those traders who are looking forward to looking at opportunities next week, just move your calendar forward. You'll see there's a huge amount of really chunky numbers, okay, and not a lot of central bank stuff. So we've already had the central banks come out and give us their opinion and their views on direction. Next week we'll get a lot more data, okay, for us to work out what the central banks are going to do from there. All right, guys, that's it from me. Have a good trade day, and if I don't speak to you before the weekend, have a good weekend. Cheerio.